Hello everyone. This will be the final lecture on throughput accounting. And what we'll do is we will cover a little bit of terminology and some of the things we would have already gone through in lecture 1, 2, and 3. Now let's start. Throughput, we covered that in lecture 1, and that's your sales revenue minus material cost. Total factory costs, well, all production costs except materials because we would have accounted for these in the throughput. And then we're given these couple of ratios down here. So we are told return per factory hour, cost per factory hour, and then throughput accounting ratio. Now, what I'm going to do, I'm going to use the same question and try to illustrate these little formulas because normally this is what you will be asked to do in the exam. Now, return per factory hour, if you think about it, we've done that already in lecture 3. So I'm going to take you back to lecture 3. Remember, we calculated the return per factory hour, and that was 50, and then 40, and then 100. And what I've done is I've just replicated that here into lecture 4. So return per factory hour, that's fine. That's done already. But what is this deal here? So return per factory hour, well, um, first of all, you're told throughput over time on key resource. So throughput is this, time on key resource is this, 1.8 in the case of scalp, and that's your return per factory hour. What about cost per factory hour? Now, when you're given total factory costs here in the formula, I want to add something. Um, it's actually excluding material cost, right? So when we're talking about total factory costs here, it's every fixed costs. And if you go back to lecture 1, anything from labor to other variable costs, we account for those as fixed costs. So total factory costs in our question is 4320. It's the same. I've just copied. So taking you back to the question, we're told, there you go, total factory costs, remember, is 4320, and the available hours for each worker was 480. So I've again replicated that here. And what we need to do, we need to calculate, well, what it costs per hour to run the activities. And what we do is this. Well, in all our cases, well, we have 480 hours available. So it will be equal 4,320 divided by 480. Oops, there you go. So in effect, it cost £9 per hour in terms of cost to run the factory. So there you go. So whoops. So cost per factory hour is 9. Now, what we want to do, if you look at the formula, we want to find out the throughput accounting ratio. Now, for simplicity, in terms of writing everything down, I'm going to call it the TA ratio. Hope you can relate to that. So it stands for throughput accounting ratio. And we are told it's the return per factory hour divided by the cost per factory hour. So let's try to calculate that. Return and divide by, so return divided by the cost per factory hour. And let's try to do the same thing. Now, here we're not trying to rank the products because if you go back to lecture 3, we have already done that. And we know we will manufacture teal first and then second scalp and then third is eider. But why are we asked to calculate the throughput accounting ratio and what is its terminology? When in reality, what we're saying here is, well, if it costs £9 to run the factory, we want a throughput accounting ratio. And if I take you back to the formula, it's return per factory hour divided by cost per factory hour. So we want a return which is higher than the cost of running the factory. Now you can see here, well, it makes sense in all our cases. And remember, we have already ranked this before. So my point is this. You would always consider manufacturing the product as long as the throughput accounting ratio is greater than 1. Because that would mean you're making a return per hour which exceeds whatever costs you're incurring per hour. And the deal is this. You would reject, if you want the production, reject a product when the throughput accounting ratio is less than 1. So there you go. And that concludes the whole series on throughput accounting ratio.